Good afternoon, everyone. We are Group 19. The topic we are going to present is Brexit and foreign exchange exposure. This is the content of our presentation. Brexit refers to the withdrawal of the UK from the European Union. Following a referendum held on June 2016, more than half of the voting supported UK leave EU. After that, a 2-year negotiation was conducted. Until 29th of March 2019, a no-deal outcome forced EU to extend the time for UK to deal with Brexit. During this period, Brexit has caused a worldwide influence. Next, we will deeply talk about how Brexit influenced the foreign exchange rate risk. After the referendum, pounds depreciated dramatically. According to data, it reached its lowest point in the past 31 years. Pounds to dollar was once decreased by 15%. Based on Bloomberg's study, since the vote, pounds has shown a tendency of downward until UK invoked Article 50 of the Treaty on European Union. After that, it has a period of upward again, until UK released Brexit transition plans. In the early 2019, it started to recover again. Her Majesty's Treasury predicted that UK's GDP will drop by at least 6% due to Brexit. Bank of England's responses caused further expansionary monetary policy and rate cut. Those negative factors depreciated the value of pounds to other currencies. While softer Brexit will drive up the value of pounds, experts suggest that softer Brexit can grow economy by enhancing market confidence. That is why Brexit to dollar has upward tendency when softer Brexit was released. From those changes, we can see the fluctuation of pounds to dollar is following the development of Brexit. The peak and troughs were highly related to Brexit issues. Now, we will discuss how Brexit impacts foreign exchange risk of USD. As a typical safe haven currency, US dollar has been fluctuating a lot in the past few years. Brexit shock resulted in a surge in Chicago Board Options Exchange's volatility index, that caused a delay on Fed rate hike. Besides, US financial industry has always set up branches in UK as an entry point into European. If UK no longer exists as a bridge connecting Europe, then London will lose its financial status. It's possible that US companies will withdraw from UK market. This consequence will affect foreign exchange trade significantly. Moreover, Brexit is likely to affect US trade strategies as well. America may delay the transatlantic free trade agreement. This will potentially affect the exchange rate risks of US dollar. Except pound and dollar, Brexit will also influence other currencies, like euro. UK has strong relationship with other European countries. So, if UK leave European zone, a lot of things will change, like European free trade, financial institution rearrangement, labor issue and so on. And then fluctuate exchange rate of euro. Brexit will increase the exchange risk of euro. European companies who earn British pounds will suffer lose risk when exchange them into euro. If pound is depreciating, same amounts of pounds can be exchanged for less euro. As a result, those firms' income will highly influenced by the exchange rates, even though the exchange rate of euro did not fluctuate a lot in this period compared to pounds. Brexit do have influence on euro. One day after Brexit vote, euro depreciate by 4% against USD and 4.7% to GBP. Experts even suggested that euro to USD will depreciate to $1.05 to $1.08 in the coming future. The head of foreign exchange strategy at BNP Paribas said that euro may lose its safe haven currency status. Because Brexit make it becomes more unstable, the increasing uncertainty will damage investors' confidence toward euro and then place pressure on it. As a strong currency and a softer Brexit expectation, euro starts to recover after the depreciation. Although euro's performance cannot go back to its best level, euro has been enhanced by signs of powerful eurozone data. Change of Brexit will still fluctuate the foreign exchange market in the future. Next I will talk about how Brexit influences the foreign exchange risk of China. As one of the UK's largest trading partners, UK plays an important role in helping China to expand European market. Similar to US firms, Chinese investors regard UK as a gateway to Europe. After the announcement of the referendum, pounds to Chinese yuan dropped sharply. From the perspective of multinational business, a lower exchange rate means the depreciation of real income. Thus, Chinese investors cut budgets and reduce their investment in UK. Furthermore, the change in exchange rate has impacts on money supply via the purchase of foreign currencies. For example, Li Ka-shing owns the CK Hutchison and the 37% profits come from the UK. Once the exchange rate decreases, the real profits is worth less, and this usually causes stock valuations to drop. Since the second half of 2017, GBP to Chinese yuan has been remained relatively steady, fluctuating. Bilateral trade and economic cooperation are one way to stabilize exchange rate. As UK has lower bargaining power in international affairs now, Chinese government is willing to open negotiation on trade agreements with UK. At the same time, the British Chancellor of the Exchequer promising UK will actively take part in the Chinese Belt and Road Programme, especially for finance and engineering project. A growing China-UK relationship enhanced value of RMB to USD, because exploring market development in Britain reduces the reliance on the United States. After 2017, RMB to USD rose for a period of time. Certainly, Brexit is not the only reason leading to exchange rate volatility. The exchange rate changes every day because of various reasons, but the variation trend can be explained by a major political event.
Now I am going to talk about risk hedging concern with the event. With the development of globalization, international trade is a full swing, and the foreign exchange market is becoming the world's first liquid financial market in the past few decades. In 2010, London, the capital of the UK, has recognized as the most important center of foreign exchange trade in the world. For this reason, the referendum result of Brexit shocked the foreign exchange. As Brexit is still in process and the UK was agreed to leave the European Union until October 31, 2019, this event will potentially create uncertainty until the completion of the Brexit. It's important for international trade merchants, international investors, foreign exchange investors to identify the risk that they will have and avoid them in this special period. Safe haven currency is a good tool for limiting losses caused by the volatility of foreign exchange. There are commonly two safe haven currencies, Swiss franc and Japanese yen. According to a research, the Swiss franc and Japanese yen had appreciated for 1.46% and 3.85% respectively during the referendum period. As the purpose is to hedge the uncertainty, the Swiss franc is a preferred option because the currency was less volatile during the period. Besides, considering the political stability of Switzerland, the country applies neutrality policy in global affairs. This ensures the country's currency stability and helps to gain confidence from foreign exchange market.
Next we will going to talk about how company hedge the foreign currency risk exposure. Financial hedging and operation hedging are the two main methods to hedge the foreign currency risk exposure. Financial hedging refers to the use of financial derivatives like foreign exchange forwards, foreign exchange option and currency swaps, and other financial derivatives to reduce or offset the foreign exchange risk exposure of enterprises and the company's exchange rate fluctuation sensitivity. Foreign exchange forward to hedge foreign currency risk exposure. If the company holds a foreign currency long position and the foreign currency rises in the future, or the company holds a foreign currency short position and the foreign currency had long-term discount, the forward hedging can be better than the spot price. In order to enhance the hedging efficiency of forward contracts, it is necessary to continuously adjust the hedging. Brealey and Kaplanis, 1995. There are many evidence shows that the portfolio contained foreign exchange forward has well risk-return performance than the others. Foreign exchange option is a right given to the buyer to buy or sell a particular currency at the agreed execution rate for a period of time. Buyer of the option have a right to choose execute the option or not. After the option seller sells the option, the buyer assumes obligation. Once buyer asks to execute the option seller must fulfill the obligation. For the buyer of the foreign exchange option, only in the case that the market exchange rate is benefit for themselves, the buyer will choose to execute the option, otherwise give up the option. Due to these, when using foreign exchange option to hedge the currency risk, the company would choose the buyer side more. Currency swap. A currency swap is also a combined method of managing foreign exchange risk, but it is generally only used to control exchange rate risk in foreign currency capital borrowing. However, some evidence indicate that using the financial derivative to hedge foreign currency exposure can only hedge short-term exchange rate risk. While the best method for the company to hedge the long-term exchange risk is operating hedging, there are several approaches for the company using operating hedging. Choose the right currency, purchasing insurance, financing with the bank, advance or deferred payment. In conclusion, the Brexit is still in progress, and there will be many uncertainties in the international economic market during this period and have an impact on the international exchange rate market. Therefore, investors can use safe haven currencies to hedge exchange risks, or use financial derivatives instruments and operational hedging methods to hedge losses that caused by Brexit uncertainties and foreign exchange fluctuation. Thanks, that's all of our presentation.